Right, friends, part two of the stock market update being recorded on the 13th of January, looking at the week that's just gone, but more importantly now in this second part, the week ahead. Look at part one if you want to see the S&P 500, the indices, and a look back on the week and what's rallying, what isn't. Now, coming back to this one, where are we on this? Well, Eli Lilly, Toppy, it's been in my SIP and ISA for over a year now. It's given great return. I think it's been like 70%. But as you can see, when they're rising like this, the momentum, there is a danger it's going to fall off. There is a danger this is going to go to the lower end of the channel. So if you're risk averse, you might say, forget it, I want to get out of there. If you're still holding on for these kind of returns, then you would say, well, I don't mind. I'm not going to trade my investments. It'll drop a bit. That's okay. All right, but that's where we are with Eli Lilly on that one. Now, let's go to sterling US dollar. We'll come back to stocks in a second. As you know, it was my biggest trade of 2022 because when we got in at the bottom, well, we didn't get in right at the bottom. We got in here, so we missed quite a bit at the bottom, but we got in there, good enough to get this rally. Now, look at that. That MACD, again, looking, the monthly looking to have based and slightly move upwards, and if it does, then it should mean this slightly moves upwards and goes back to the kinds of levels we saw before Liz and Quasi. Okay, so there's money still to be made there, I think. APA, Toppy, look at that. Risk averse, you're going to think, ooh, could it do that? And you decide how risk averse you are and what you do about that then. MasterCard jumped up. It's pretty much at all-time highs. A lot of people would have missed that. And it's basing, so it should potentially, and I've not bought some yet, but it could be one which I will definitely look to buy, but we'll keep looking at it. And if you look at Visa's chart, almost identical, obviously, and that would be looking to go there, that would be looking to go there, and we'd be looking at, say, 26% over a year if things pan out. Disney, on the other hand, more speculative, almost for fun, as you would expect with Disney. 107% return is what I do, so I might buy it, I won't quite say for fun, but my SIP and ISA, because that, again, looks like it's flattening. I might be wrong. It might go do this before it does that. So I'm going to leave it another week before I get in. Taiwan Semiconductor turning up on a lot of hedge funds, and that's why I wanted to show it to you. Based goes down, this goes to there. That's what you're looking for in 2023. It's as simple as that. Booking.com, base, now starting to rise. That is what you're looking for. Nvidia, similar kind of story. Base, what are you looking for? Well, you're looking for 174% return in 12 months. That's what it would be on this one potentially as it rode up. Okay, again, a base on this, and it's starting to rise. JP Morgan, I have bought some. 40% up is what I'm looking at, which is my hurdle rate for investments in my SIP and ISA. So that's what I'll be looking at with JP Morgan. Finvolution, I've bought 11 months, 4 weeks. 40% return. Is that reasonable? I've drawn that arrow to say, in a year, can I get 40%? Is that reasonable from where it is? And it looks reasonable. Just look at the chart. It looks reasonable. Criteo, I've bought, same kind of issue. Does it look reasonable? I believe it looks reasonable. And similarly with Brunswick, they've all got this MACD, which is flat and starting to rise. And should things transpire the way I anticipate, then it'd be 40% on each of those. Similar story with Hibbett. Well, we've drawn that from about here to say 46% in just 5 months if it continues on that fast upward trend. And the MACD on the monthly, the momentum on the monthly chart suggests potentially that there's enough momentum to carry that forward. Cambion, I've also bought as well, part of my shortlist. Value, growth, income, cash flow, all of those things, as you know, from my webinars and tutorials and campaignforamillion.com that I look for. 41% in a year. Is it reasonable? Given it looks, yes, that looks reasonable. We're not saying, oh, it's got to do that to do it, or it's got to go up like such a sharp inclination. Lamb Research come up on some of the hedge funds, so I want to show it flattening there, and that's what the hedge funds will be looking for. That 60% return is what would have got them excited. I'm not saying it's not guaranteed. ServiceNow again come up with the hedge funds, so that's why I wanted to show you it, because it's come up with those as well. And what does it mean? Well, if it continues along there, then we're looking at 88% in 12 months. Is it going to do it? Is it guaranteed? It's not one which was on the approved filtered list. It's more that because the hedge funds had looked at it, I wanted to show it. Please don't forget my campaign for 1 million to teach 1 million people how to be better investors. Feel free to ask me questions on there, anything I can help with. But have a look at the URL. You get copies of my books, my articles, videos, if you want to learn all this stuff. And if you don't, just keep watching the updates and email me any questions you have. Thank you all very much. And please do like and subscribe. It'll really help us out. Thank you.